All right, hi everybody. It is Wes again with Pikes Peak Trades, and just have enough that I want to share with you this weekend that I think getting it out in a video is just going to be much more concise, allow me to give you some more detailed explanation. I'm going to show you some cool things. I'm going to show you, I think for the first time in video form, my all-time Dow Jones Industrial chart. Use it to talk about where I think we could be going. Both from maybe a surprising move to the upside or even a surprising move to the downside. But what we're actually looking at right here, a quick recap from last week. So last week, this is a still shot of what I was anticipating. I was anticipating a sub-degree wave 3 high with a sub-degree 4 pullback that would then take us up to prices in the 4,300s. And what actually ended up happening, as you know, is we did get a little pop on Monday, but it was actually this high. So we actually did see then for the rest of the week, we saw a really painful pullback. Okay, so if I just jump into what actually happened, here's that picture of what I was looking at to extend. It did not. And then from this high that was made here, this would have been an after hours work on Monday, May 9th. Then it pulled all the way back into Thursday. But what we then did see, I think, was quite a significant recovery. Okay, so I want to talk a little bit about the technicals behind that recovery, and then, of course, give you some of the projections going forward. So I want to bring in here the look that I've been sharing recently, the NYMO, the VIX, and the SPX with respect to its Bollinger Bands. So what we saw here this week is we just saw a cascading sell Monday into what I think was a capitulation low that ended up creating some of the most oversold conditions that we've seen since a year ago. So we're talking about since the COVID crash in March 2020. Then what we needed to see is after the NYMO and here the VIX, this is on Thursday, and here the S&P were outside of its BBs. So we got the S&P, the NYMO beneath its lower BB, the VIX outside its upper, is we needed to see that reverse. And we did. Okay, and we saw that happen on Thursday. We saw that VIX close back in, the S&P back in. We saw the NYMO back in, and then we needed to see continuation, and we got it on Friday. So I look at that kind of three-step trigger as extremely significant, and it should be good for at least a multi-day bounce. And if we're only getting bounces out of this, I'll kind of suggest some places where it could stall and reverse if, in fact, we're to see more selling legs. My primary count at this point is that we set a significant low. And you'll see that through the Dow, through XLF, into small cap growth. We've got to get everything aligned, and that's what I think this week did. I think it did align it towards some bottoms where now everything can move in tandem to what I think will eventually be some significant tops at some point this summer. Obviously, we have to be aware of a continuation of a selling leg. So if the NYMO cannot clear these readings, if it cannot get above plus 20 at any point this week, there might be a short-term pullback Monday, but it's got to then reinitiate upwards. If it gets rejected beneath these levels, that's going to be one technical indicator that I'm looking at that we might actually just be looking at some B-wave bounces. Okay, let's also just briefly look at the NYAD. So we had a nice 2-day move back up in the NYAD, and if we do see stocks get to restored all-time highs, we need to see that also make a new all-time high. If it does not, then we could have the divergence in place for a significant top. Okay, so we're still not quite ready to say that the bulls are out of the bear woods yet. It's still a little bit iffy. But I do like, with that trigger that I just shown you, I do like the opportunity for bulls to reassert themselves going into the summer. Okay, now I want to jump into a chart that I've never shown here. I want you to take a look at my all-time Dow chart. So we're looking at the DJI. This is the yearly chart. And why look at the Dow? It's not something that's widely talked about on Twitter, but okay, let's think about it. It's the oldest index. We have data on it going back to the 1600s. You would anticipate that its patterns, that its structure would be something extremely significant for the overall market. And the stocks in it, are some of the most liquidly traded, the biggest names that we have. So we're looking at the way that I'm counting the Dow, and you're going to find many different ways of counting it. I think we've seen 4 grand supercycle waves. So the top of the Roaring '20s, and then here we see the Great Depression, and here we see what I believe started a supercycle correction with the dot-com bust, ending in the housing bubble into early 2009. I think we're just working on setting a couple of the supercycle legs of our final grand supercycle. And I think the COVID crash set a supercycle 2. We are somewhere in my projection within supercycle 3. And what eventually I'm going to show you as I scale the time frames down, I think this typical fib projection for this supercycle 3 wave is going to end up being low. Okay, now I hope you're wondering and your eyes are tuned to this. Look at the 3 ellipses here. We've got this top connected to this top, and then you might be thinking that bearish side of us might be thinking, well, you know what, we just topped it, and now we're going to turn back around in a significant correction. But start looking at what's going to happen on the small time frames. So I take you now into the monthly, and you're actually going to see this is the same line connected to the tick as close as it could be here in log scale. There's our dot-com top that ended in I think a decade-long grand supercycle correction. We just had a breakout month in April. This month so far, a back test and a recovery above that line. I think that's extremely significant. This is an all-time resistance line on the Dow Jones Industrials. Okay, now let's keep scaling it down into the weekly. This is that same line going all the way back. And we've seen now, here are those 2 months that I just talked about, really a month and a half since the start of April. And we've seen a breakout, and I think we just got the back testing move. What finished this week, May 14th. Now, if that's true, then we should see this acceleration channel continue up in the Dow. However, if this is a fake breakout, fake breakouts are typically very bearish. So if we begin to see a retreat back under that line, which also nicely coincides with the 8-week EMA that was just perfectly tagged here on what I think was this backtesting move, then we have to be on guard for something quite bearish. I think at that point, it could be a cycle degree correction, although you're going to see some shorter targets in blue as we work through some of the other indices and ETFs. Taking you down now, where do I think we're at in the middle of it is I think we have yet to complete its first primary wave. Okay, so here again is that line. This is that all-time line with a couple other rails in there that I like to use in conjunction with my fibs to show resistance and support levels. And I would be suggesting that the Dow needs to get back inside this acceleration channel. So this is also why I thought maybe at the end of the day, Friday, it'd be wise to sell into those big green bars, because you're going to see that we have other names and indices that just bumped right at previous support that was broken. So I wouldn't be surprised if we do see a Monday pullback, the consolidation, the basing, the gathering of strength before the pushback into these bull channels. It's also possible that a really strong move just gaps above it. Okay, so we project, we monitor, we adjust, but we're ready really for anything. And that's what I think Elliott Wave, that's how it can give you a little bit of an edge. Into the short term here now on the Dow, you're going to see again, there's the bumping up into that resistance. I've got it somewhere within a degree 3. It's actually really hard at the beginning of a new bull progression to chart the sub-degrees, So this is my best guess. I wouldn't be surprised to see a backtesting move again of some of those all-time resistance lines that have just been broken over the last 6 weeks. So if that happens and we see the Dow retreat and hold support here in the low 34,000s, I think that would be a signal that you could buy long. You could buy long, and then obviously your stop is if it breaks down. Is if it breaks down here, certainly moving beneath the low that was set here on Wednesday. That's when you've really got to be on guard, because then all of this here could be part of that fake breakout that I'd mentioned that we need to be on guard for. Okay, let's look into some others. And I'm going to go right now. I'm going to make a kind of a switch here from the blue chippers into the small cap growth, into ARKK. Okay, because we've got to see small cap growth get back and participate if we're going to see the optimistic bull targets that I've got for 2021. And did we set a significant cycle low? And I think there is a chance that it's in. Almost a 50% fib of the run up from the COVID lows. It's a nice hammer looking candle. It probably was too much to ask for it to recover here, the 50-week MA. And so bears would say, hey, this was probably a shortable bounce. And I can't disagree, partially for what I've just shown you, that there were moves on Friday that terminated right underneath broken support. That was support that was broken that might now be resistance. So we've definitely, the burden of proof is now on the bulls. The bears have had their control, and we need to see what's going to happen early in this week. But I think there is some technical evidence here to suggest that this ARK Innovation ETF could have bottomed. What I like about that evidence is we have this declining selling channel. We got a breakthrough and a close above it on Friday. And notice that was also done with daily RSI and MACD divergence. And under account, that is valid to fulfill an ABC down, a selling leg A, a triangle B, and then here 1, 2, 3, 4, 5 waves down for that leg C. And then here's that channel break. And then really after the initial gap up, it just kind of went sideways. So might there be a backtesting move? You're going to see on a lot of my charts, a backtesting move, I think, is an opportunity to take a chance to buy. You certainly now have a tradable low that you can maneuver against. Okay, let's get back into some of the others now. So let's get into here our SPX, our Qs, then we'll go through IWM, XLF, and then our individual names. So look at this lower rail here that contained a degree 2 within what I think is the same leg. It held the degree 4. This is how you channel with EW. We got the 2 and 4 connected and a hammer candle. And I think this could be good for continuation. So I still have this working to continue this intermediate 3. Now, it is possible that any new all-time high actually finishes that leg. So I've got these kind of fibbed staggered targets. It could end with any new all-time high. Okay, so we've got to be aware of that. And of course, it's possible that we don't see a new all-time high for a long time, for possibly months. And that's what this blue and the red count kind of stagger us down. So the red would correspond to that fake breakout on the Dow. The blue would just have it in a not so bearish degree. And each of these you would see on here on the weekly would most likely tag significant weekly support if in fact that channel breaks. And that's what we would have to see, to really get me to change from a bullish count into a bearish, is we have to see weekly breakdown closes. We did not see that this week. So at this time, I'm not switching anything to bearish counts. Let me just maneuver now on through our smaller time frames here. So we'll take you into our SPX daily. And here is that support. I want to talk about this gap. So you've heard me talk before that the most significant gaps are set within nested wave threes. And that's what we've got here. It's one of the reasons why I think this count is correct. It's within a degree three of a degree three of a degree three. And it held. It didn't close. So if we're actually in a very bullish progression, I don't think it will close for quite some time. I think that could be enough for it to get back into an acceleration channel. As I talked about last weekend, I've got really three targets: 4,300, 4,600, and then 4,900 to 5,000, depending on how we could ladder up. Okay. Now, it's also possible that we got the rejection here and we're going to see a renewed selling leg. And you know that those bears are active and vocal. Some of them are very profitable from this week. So, congrats to them for being making quick adjustments and scalping those puts to the downside. And there wasn't enough edge either way for me to say that I could position over the weekend. So I feel pretty safe and secure being a vast majority here in cash in my active trading account, and really going to let the market dictate what I'm going to do for positioning for this coming week. Let's go ahead and look now at our futures. So let me make sure that we are finding that correctly into here. So into our futures, and you're going to see there's that lower rail hold. And I didn't point this out on the SPX, but here on our ES minis, we got that close above the MA cluster. And I had tweeted that out before market on Friday. That was, I think, really significant. It also closed above the bearish 0.618 fib retracement marker. And so as I would take you through here into some smaller time frames, I see an impulse. So I see a 1 up off the bottom, a 2. I think 1, 2, 3. I could see a wave 4 subdegree, kind of to back test this channel. This was obviously a fake break. Could we back test it before we get up and out and then solidly back within this bull channel going forward? And you'll see something pretty similar here in the cash. So will we see a little bit of back testing move? This pivot area, 4165 to 4175, contained price throughout the day Friday. That's got to be conquered. And then eventually, like you saw in the daily, here is that bull channel, that lower support that was broken on the big gap down here on Tuesday. We got to get back inside it in order to give those higher bullish legs an opportunity. Okay, let's get into the Qs. So QQQ, and you're going to see, again, you're going to see a rail test and a hold. Now it pierced it, but we got the closing hold. It is beneath its 8 and 13 week EMAs, but we didn't get a channel breakdown. Okay, so still optimistic that bears can go ahead and assert control. If not, we probably have just seen a bounce that's going to get sold and then a tumble. And we're going to be ready just in case that happens. So we get into our smaller time frames, here into the daily. There's that back test of the broken channel. So again, another reason why I wasn't aggressively holding things over the weekend and thinking, would we get a little back testing move to test it? That's where I would enter. Certainly against the low of the day on Friday as a possible stop. Okay, so let's get into our futures here. We can get into NQ, and then we'll get into the smaller time frames. There's that channel test. Here we see an MA capture. It did recapture here. The 8 EMA, which is pretty clustered with the 50-day, didn't get it. So that might be enough resistance to cause it to pull back into the smaller time frames. On NQs, you're going to see a very similar count to SPX. So an impulse 1, 2, 1, 2, 3, possibly to test this support. So pivot breaks and holds are extremely significant. Okay, probably the only one that's more significant is a break upwards of a rising diagonal. That one probably more significant because it really shows you the accelerating power like I showed you on the all-time Dow chart. We get a hold in this area. Possible wave 4. I think that's a buying opportunity if we see that on Monday. Okay, into the Qs, and you'll see obviously similar count. Let me just scale this back a little bit. Don't have the details on it. What I do have on this one is the possibility of the bearish move. Okay, so I've got this red 2 labeled that it's possible that this was a selling leg 1, an ABC, and it gets rejected. And we have to be on guard. So if I get you back into the NQ, what would be our clue? So a breakdown of this subdegree wave 1. So if we see NASDAQ futures break below about 13,170, my bias might shift. It might change because that might be the indication that this is just a 3-wave, B wave bounce, and we're actually going much lower. Okay, so let me go through before the individual names. Let me get you into the other ETFs I like. You're going to see another piercing, what I think is a support touch with the hammer candle in IWM. And we've got to see our small cap growth get back on it. Okay, the portion of IWM that's been solid has been obviously the financials and the industrials, at least until the selling really intensified on Tuesday and Wednesday. It's the technology, communications parts, the healthcare parts of IWM that have to get back up, and in order for this to happen. So we'll see what happens. I've got it starting in a minor leg 3, obviously with the same staggered set of potential counts down. What do we need to see moving forward? We got to start seeing conquering of MAs. And so it just ran up and touched. It's 21 day. Here's another down channel resistance. It's got to get up and above it. That's what you got to see. You just got to see a staggering conquering of these levels. And again, possibility 1, 2, 3, 4, buyable Monday. That's where I'm leaning at this point. Now, we're not just going to go straight up. So there's going to be volatility, and the volatility throughout the month, I think, could culminate in June. Seasonality in June shows some bearishness. So I'm kind of projecting out here that we could see a run up into early to mid-June, and then maybe a more significant selling leg. That would kind of match some historical seasonality if we do in fact see the bullish resolution. Okay, into XLF. Now this is an interesting weekly candle. This could potentially be an exhaustion candle if we see the bears get back in control. It is a closing high. There is not weekly divergence though. So I'm not going to let one piece of questionable candlestick totally overturn my thesis here. Just aware of that possibility, as XLF did in fact make a new all-time high this week. But I think XLF did put in a wave 4 low just like the Dow, and I've got it still marching up. I think it could get into the 40s. We've seen really solid rotational strength as interest rates have risen over the last few months, has made the big banks a lot more attractive. And I'm not saying I'm projecting a continued interest rate spike. I actually think that would be against my thesis. I just think some fundamental market-wide strength could still project XLF up along with the general market. And you can see that kind of channeling back into that bold channel and then a target again into June. Okay, so now some individual names here, and you can't ignore the big boys, and I really specifically want to show Apple and Tesla because of their weight and because of them being beaten down and not having set new all-time highs since the beginning of 2021. We've got to see it. We've seen Facebook do it, Amazon do it, Google do it, Microsoft do it. Not Apple, not Tesla. So these are the ones that we're going to focus on. And is that candle here at the end of the week, the hammer candle back above some support right off the 34 EMA, is that going to be a triggering move? So obviously this 126 area is huge support, but the 130 to of course the area here at the pivot to 138, that's the significant resistance that's got to be broken here. Let me get you into the daily. On Apple, sorry, got to get to here. Okay, and we saw a little bit of a 2-day test of the 200 MA. And this is kind of like ARKK. I think we got a down channel breakout. Now, would we see a little bit of back test? So in the short term, could we see a back test of that channel? And again, that's going to be a trigger for me. We see Apple down 126, maybe a little bit lower, probably going to take that trade. Now, let's get into Tesla. So Tesla, this one's contentious. What I want to point out here is the kind of sideways consolidation that I think we've already seen in Google, Amazon, and Facebook. So here it is in Tesla. Here it was in GOOG, big breakout. Here it was in Facebook, and I could pull up Amazon, show you the same thing. And my suggestion is maybe now it's Tesla's turn. I really like this lower rail touch. So in non-log scale, just a perfect touch, that this could be catching a primary degree low. Okay, now the projection here is pretty exciting. If you take the width of the rectangle here and you add it to the top, it comes right out to about $1,000. So pretty magical psychological number would be my projection if in fact we see Tesla immediately this coming week. It's got to conquer these downsloping MAs. So where does it got to get? It's got to get back towards 700. We need to see Tesla strongly into the sixes. It needs to recapture these on a closing basis. I'm not saying it has to be within a week, but it's got to make a great effort at it to get back to 700 to give a breakout an opportunity, let's say into the early to mid part of June. Into the daily here on Tesla. There we go. Okay, there's that consolidating box. There's that rail hold. There's the pierce and then the close back above the 200 MA. Very, very similar to what you just saw on Apple. Here's its selling channel, and it's got resistance. Yeah, there is a ton of resistance on Tesla. So it's got a lot of work to do. Now, if we're still in a selling leg, so if we're still in a selling leg into the short term, you know, what do I think that looks like here on Tesla? Into the short term, probably this 3 goes here and a 4 to back test and fail. That's what I think a lot of the bears are out there thinking. By the way, there was some dispute out there among waivers on whether this big selling leg down counts impulsively. I think it does. So you can go back and you can double check. There's no overlap here. There's no leg 3 shorter than 1 or 5. This is a valid 5-wave impulse for an ABC. Yes, there is truncation, but that is certainly not disallowed under an Elliott wave zigzag. Now, as far as the short term, I just don't know. I'm not yet willing to label this. We need to see more bars. What I would simply offer to you is if my projection is correct for an all-time high, you don't need to be so eager. You can scalp it if you're that nimble and skilled, but you really could wait. You could wait for the kind of breakouts that are going to propel it back out of this channel. And this is, if it's going to be a bull flag, is just perfect. 2 perfect touches here, multiple active touches on the top. Usually what happens is a 4th touch will cause the break. 1, 2, 3, and that's what eventually I'm going to be looking for. And that might take a while, but let's just see how that plays out. Okay, any other individual names here? I'll try to follow up with some individual tweets on. I don't want to get too much more into that. I just want to show you the big things Apple and Tesla as being extremely significant, and everything else I think is really going to follow. So let's see what happens. As always, trying to get us on the right side of the trends. I wish you a wonderful weekend. Be smart. Make sure your primary objective is to manage your risk well. Capital preservation in an uncertain, choppy market is crucial. Make sure you've got enough dry powder to get ready to buy if we see some wave 2 higher lows, but also know your levels and know your supports if we see breakdowns. So as always, thanks for the likes and follows, and look forward to another exciting week coming up here in the middle of May 2021.